Hi, everyone. This is Jason Burek of Wall Street for Main Street. Welcome back for another Wall Street for Main Street podcast interview. We're recording this interview on Monday, December 1st, 2025. The US dollar gold price, it's rallied again, well above $4,200. I think it got up to like $4,270 over the weekend. The silver price has been on fire, absolute fire, the last couple months. I think it hit like $58 a couple hours ago. It's at $57.89. Today's special guest is a returning guest. He's been an asset manager for many, many years. He also writes a macro newsletter covering gold and silver mining stocks. Adrian Day, thank you for joining me again.
Well, thank you, Jason, for asking me.
So, Adrian, I want to get your thoughts on the profit margins for the gold and silver miners right now. Now that we've had Q3 earnings for 2025, are they able to keep their costs in check? Or are we seeing really steady profit margins, increasing profit margins, or are some of these miners actually struggling to keep their profit margins intact despite the metals prices where they are?
No. I mean, I think the costs are being well contained by most companies. And where you see an increase in costs, there's normally a particular reason for it, and it's temporary, not a fundamental part of a business. We could talk about examples if you want to, but generally speaking, I think they're keeping costs very well under control. And this last quarter of the year, it hasn't finished yet, of course, so we don't want to count our chickens and all that. But I mean, this should just be a spectacular quarter when you think that, when you think that at the last quarter, we only just got up to 3,700, and now this quarter, we're above that the whole quarter. So, yeah. And for a lot of companies, as you know, a lot of the big miners, right at the beginning of the year, they said that it was back half weighted. And in fact, the last quarter of the year was expected to be their best year of production. So given that, plus the price, yeah, it should be phenomenal. But
And
there's
I'm look,
very little in the way right now. I mean, this will change, but there's not a lot of cost pressure on the miners right now.
Okay, so this is very different than say 2011, where we did have a huge pop in the gold price back then, up to almost $2,000, 1,900 for the first time. But the costs were rising, as Rick Roll, my friend Rick Roll, and your friend Rick Roll would say, the costs were rising faster than the metals price. I mean, there was like insane stories back then of like the truck tires on what the Caterpillar earth movers, that they were like the prices, there were shortages. The miners were demanding much higher wages. I'm looking at the oil prices right now. I mean, oil's been in a range. So you think like one of the largest input costs for oil, energy, diesel, those types of things, that because oil is not rising rapidly, that's not going to put any cost pressure on them since oil's in a trading range?
Yeah, no, absolutely. And you mentioned 2011. I mean, you look at the price of oil in 2011, it was over 140 a barrel. And then the second largest cost input, of course, is reflected in the currencies. So wherever the company has their mine, the currency of that country is the second largest cost input because it affects everything from the labor to, the food they buy and everything else. And again, you look at, let's just look at the Australian dollar, the Canadian dollar. I mean, all of these, the Chilean peso, the South African rand, all of these currencies are pretty low right now and meaningfully lower than they were in 2011 at the last peak. The Australian dollar was at a premium. The Canadian dollar, of course, was at a premium to the US dollar. And now they're trading, at significant discounts. And I mention those four currencies because, of course, that's where a lot of the mines are. So this will change, and we shouldn't get used to this for too long. But yeah, on what you said, quoting Rick, you go back to the period, I think it was like 2005 to 2007, where the price of gold doubled, and the margins actually shrunk. I mean, actually reversed. They were no better off in 2007 than they were in 2005 because of the cost increases. And right at the end in 2011, the same thing.
That's really sad that the cost increased as much or more than the metals price did, and then you see that what in the profit margins. But I know you've been covering these companies, gold and silver ones, for a very very long time, and you made a lot of money on juniors and royalty companies over the years. Have you seen gross profit margins like an industry average? I think we're around 50% gross profit margins for the industry, and it's been that way now for well over a year. Have you seen gross profit margins like this before?
No, never, never. This is astonishing. And when you say gross, you're talking, of course, about all in sustaining costs. You look at the actual costs of the mines. Um, it's not unusual for mining costs, the actual operation costs, to be less than $1,000. And as you say, you've got a gold price of 4,200. But for most of the industry, very few exceptions, most of the industry has all in sustaining costs at 21, 22. And so, yeah, pretty close to 50% profit margins. And that's, I've never seen anything like that. No.
Oh, you said the industry average for all-in sustaining costs, you said is a little above $2,000 an ounce right now?
I didn't say what the average was, and I won't say it because I don't know. But for or
I think the mining journal, Adrian, I think it has it. I'm quoting the mining journal. I think it has it
Mhm.
around like 16 or 1700 for the industry average, but
Oh
there's ones that
yeah,
are higher and lower than that.
yeah, okay. I mean, obviously, it depends what companies they're including in that. I would bet that it's higher than that, but I would have to check. But certainly for a lot of the large companies, it's higher than that. Yeah, but but um, but they're still making good money, and the operating costs for a lot of mines are under 1,000. Um, so yeah, yeah.
Are you surprised that we haven't seen companies like Lundin Gold, which has an amazing mine, what the Fruta del Norte mine in Ecuador, look to diversify, say, into Canada, somewhere safer, or Barrick Gold go and do an acquisition since they had the problems in Mali with the mine confiscation, go and buy like a good deposit in Canada that's near term that they can build and make more money?
Well, Barrick, of course, until recently had the particular issue of Mark Bristow, who did not like to pay premiums for anything. And there were a lot of opportunities in Canada over the last few years, big mines, that he passed on just because of the premiums that were other companies were willing to pay. So, um, yeah, and I mean, the truth is in Canada, for a company like Barrick, it's got to be a pretty big mine. You're going to have to buy a pretty big mine to make a difference. But we are seeing acquisitions all over the place, as you know, and I think that's only going to continue. But
So are you saying then that like a project the size of what Blackwater, which Artemis Gold has, that's around 300,000 ounces a year. I think they have an expansion plan already underway to get to 500,000 ounces of year. You're saying that that's too small for Bear Gold?
no, that's probably at the low end of what that probably would fit Barrick Gold. Yeah, yeah. But whether that would be something that they would want as you know, first entree and only entree into Canada, that's a different question. But yeah, no, that's of a size for Canada. I'm not saying there's nothing out there. I'm just saying there's few and far between.
Well, they'd have to pay a premium, right, for Artemis Gold, right, at this point because they're already producing, generating free cash flow. So
Well, I think anyone you have to pay a premium these days. You just have to, unless it's got to be a really unusual circumstance to blend, and it's got to be a true merger. I mean, a true merger of equals, not a legal merger, but a true merger, not to have a premium. I mean, anyone that buys Artemis, whether it's Barrick or Newmont or Agnico, you're going to have to pay a premium. There's no question about that.
are you surprised a company like New Gold, which had huge operational problems at Rainy River for many years? I think they were very close to bankruptcy for many, many years. They did a ton of reverse stock split, share dilution. It was their capital structure was a mess for years. Finally, the gold price goes up. They finally operationally at Rainy River, they get the cost down. I think it was around $1,100 all in sustaining cost, maybe even a little bit lower than that. And then all of a sudden, what they sell the company to Coeur d'Alene. Are you surprised that a management team would do something like that?
Well, Yes and no. First of all, I didn't intimately follow New Gold, but yes and no. I mean, sometimes shareholders, sometimes pressure from shareholders comes, for a long period of time. And when things are finally fixed, the board it already takes decisions that reflect that pressure, if that makes sense. So, for example, I mean, I mentioned Barrick. I mean, the pressure from shareholders on Barrick's board was pretty intense last half and at the end of last year because of the underperform. I mean, for several reasons. There was Mali, of course. There was the lack of M&A in Canada, but also the share price just wasn't doing anything. Uh, the board talks about it, the board debates it, the board looks for alternatives, etc. And by the time they finally act in October, Barrick's share price was one of the better performers. And of course, they also announced a 4 mile in Nevada, which certainly deflects some of the criticism of Mali and Pakistan and so on. But of course, a decision had already been made, and I suspect that's what may have happened with New Gold. A lot of pressure from shareholders, costs are out of control, this, that, the other. And then they finally get an offer and say, okay, let's accept it.
Oh, I see. Yeah, I think there were similar things with Sandstorm Gold too, because they were lagging for a while and they had a lot of good assets that were royalties and streams that were under construction and they weren't fully cash flowing yet. So they just started a little bit of cash flow with Greenstone. Platte Reef, I think, is about to come online there in South Africa. And so, like, there was a lot of pressure, like you said, with the board of directors there and some of the other large shareholders that agreed to the buyout with Royal Gold.
Yeah, I also think in that case, I suspect that some of the management was ready to, you know, collect a paycheck and move on.
So the GDX right now is at $82.82. That's the gold miners ETF. It's substantially above the 2011 high, which was, I think, like $65, $66. Do you still think that the gold miners are drastically undervalued relative to the current gold price?
Well, drastic is your word, not mine, but no, I believe that the miners are definitely undervalued. There's no question about that on any sort of fundamental metric. And it goes back to what you were talking about at the beginning. If the costs have stayed pretty stable or not gone up anywhere near as much as the price of gold, then even though the share prices have moved up, right, the value of the company has moved up even more. You look as the price of gold goes up, your reserves increase in value, but they don't increase just on an arithmetic basis. They increase on a geometric basis because you're able to bring in more marginal ounces into your reserve base. So it's not just, well, this ounce used to be valued at 2,200. It's now valued at, 4,200, but you're able to bring in more as the revenue goes up, the cash flow goes up by, again, on a leverage basis, because if your margins are getting wider and wider, your margins are expanding greater at a faster rate than is the price of gold. So the value of the company increases significantly. So if you look at a lot of the valuations of different companies, not for all companies, for all metrics, but again, Agnico Eagle, for example, their price to free cash flow, which is pretty high right now, and is higher than it was in January or December, I should say, a year ago. But other than December 2024, their price to free cash flow is lower now than it has been for any of the last 5 years. Well, that's pretty astonishing when you think of what has happened to the price of gold. But it's because the value of the company is moving up faster than the price of the stock. So yeah, I think the gold mining stocks are still undervalued. And of course, as you go down the food chain, I think that argument is even more compelling.
Yeah, the valuation, how undervalued they are, it depends on what type of cash flow multiple you want to assign to the market cap of the companies. So, I mean, initially, I think what 2 years ago, 18 months, 24 months, I was interviewing other gold fund managers and newsletter writers, and they were talking about bargains that some of these producing gold miners, they were selling at one times cash flow. I mean, I don't think we're at anywhere near one times cash flow right now, but I also think that a lot of the gold miners, Adrian, are not selling at reasonable multiples right now either, even though the GDX what is at a close to an all-time high.
Well, that's right, and especially when you see the price of the commodity, it can be any commodity, but the price of gold in this case move up so dramatically, you expect multiple expansion. You expect more people to want to buy the stocks as they move up, and you get higher prices,
Yep.
higher multiples. I mean, higher
And if
multiples.
management doesn't get that, they're in charge of trying to re-rate the company, right? Trying to increase the multiple, then trying to either increase the dividend or buy back the stock if they think that the shares are lagging and that the business has good free cash flow, doing things like that, or even going out and doing an acquisition. So being
Sure.
good stewards of the free cash flow.
Sure, and we're simply not seeing that multiple expansion right now. Companies I think have by and large, painting with a broad brush. I think they have done appropriate capital allocation, bringing down debt, number one. And now you're in a situation where the GDX and the XAU are actually net cash positive. Now, that includes the royalty companies, of course, so that distorts the picture a little bit. But it's astonishing when you look at these companies like Barrick and Agnico, et cetera, and they are net cash positive. That's astonishing in what is a capital intensive industry.
Yeah, I was
With
going to say the royalty companies have had multiple expansion. I remember we were talking in previous interviews when Franco-Nevada, because I thought that was one of the good value plays. But as a contrarian, with all the problems at Cobre Panama, I thought the market had overreacted to the Cobre Panama. The rest of the business was still fine. We were talking when Franco-Nevada was at 110 to $120 a share. Here we are now. What about 18 months later? It's at $207 a share.
yeah, yeah. Well, it's certainly not what Ben Graham would think of as a cigar stub or a value stock. But I mean, I still think Franco is a core holding for us. It's not exceptionally undervalued, no, but I think it's still a core holding. Part of the run up in the price of gold, a part of a run up in the price of Franco, of course, as you say, was number one. It had exaggerated the decline when Cobre Panama was closed. Number two, we're now getting much closer, it would seem, to Cobre Panama coming back on stream, probably in the first quarter of next year. And so the market is reflecting that. And then, of course, on top of that, you've had the gold price, as you said, double, more or less, or well, it's up 50% this year.
Well,
So
you
with
brought
all
up like
those
Benjamin.
factors, mm,
Uh, Well, you brought up like Benjamin Graham cigar butts for our listeners out there. The thing with a cigar butt, if you hold it too long, what you're going to get burned. So it's not a long-term sustainable business. These royalty and streaming companies, Adrian, is about buying these things at the right price when they're discounted because these are growth businesses. I think that's something the market doesn't understand is how efficient these companies are at actually growing with the royalties and streams and then reinvesting that into future growth.
oh, absolutely. Well, I think you and I talked when Royal acquired Sandstorm, whether we thought it was a good deal, a bad deal, whether we wish Sandstorm hadn't sold, whether we think Royal Gold was overpaying or whatever. But the market reaction gave you another, Franco Cobre opportunity, in my view. The market reaction was negative, and that was a great opportunity to buy the stock.
And the combined business, what they have an enormous amount of diversification with royalties and streams. So I think what one of the issues that Royal Gold had in the past is they didn't have gold and silver byproduct streams on a lot of the best copper mines in Latin America or Turkey or Mongolia. And now that they've added Sandstorm there into the portfolio, they have access to all kind of the best low cost copper mines that are being constructed right now. They have royalties and streams on those outside of just what the normal North American assets that Royal Gold had in the past. So they have a much more globally diversified portfolio of
Yeah,
growth.
yeah. And as you say, much more diversified because one of the big hits on Royal Gold for the longest period of time was just how, Mount Milligan represented such a large part of their NAV and their cash flow. But over the last several years, and of course at a time, Mount Milligan was itself a bit of a troubled mine. But over the last several years, they brought that down meaningfully. And so right now, they're actually one of the most, with the Sandstorm acquisition, they're one of the most diversified of the big royalties.
And Rainy River, which we talked about earlier from New Gold, that was actually one of the worst problem mines up in Canada that had production problems for at least 4 or 5 years with cost overruns and capital overruns. It was just a mess. Royal Gold comes in and they bought a silver stream on that. And I'm sure they were heavily criticized at the time, right, for buying that silver stream. I think it's looking pretty good now.
Oh, absolutely. Absolutely. Well, and this is something that a lot of people, a lot of investors forget. And you said it, and I'd like to just repeat or, emphasize what you said. And that is that the royalty companies are not just defensive income plays. They really are growth stories, and they have the capital to grow. So no, I think the royalty companies, including the big ones, they're going to do just fine. If gold goes to 5 or 10,000, they're going to do just fine.
Well, look at silver too. I mean, that's going to add a lot of extra free cash flow because the average person doesn't understand how many silver streams, what we precious metals, Franco-Nevada, Royal Gold, that they actually have for silver streams.
Yeah, yeah. And Wheaton, of course, Wheaton has about 40% of its revenue from silver right now. So it has Wheaton, which people don't think of as a silver company. Wheaton has more revenue from silver than most of the big silver miners.
Well, they had to change their name because, as you know, it used to be Silver Wheaton, but there
Yeah.
wasn't any more silver deals for them to do because for the bear market, there wasn't a lot of base metal mines coming online, so there wasn't the opportunity to go and buy silver streams on base metal mines, so they had to switch to gold. So that's why they're more diversified. They had to add all those gold streams.
Sure.
But now that we have what substantially higher base metal prices, supply chains are what reshoring to individual countries, the silver price is where it is. There might be more opportunities to go do additional silver streams now.
Yeah, no, there could well be. But even without an additional one, they're still pretty silver's still pretty significant for them. Yeah.
Now, some of the small cap ones. I know you cover some of the small cap royalties with the Tether. So the stable coin, they've been buying up the shares of the smaller royalty companies. Are you surprised that Tether's gold section? I think because it's split into regular stablecoin Tether and Tether Gold, that they're going out and buying large share positions of royalty companies like EMX. I think they financed the EMX merger, and then they just bought the 25% stake in which one was it? It was Versamet that they bought
Personally,
25. Yeah, the 25% stake in Versamet for $200 million cash from Royal Gold.
yeah, and they also reported, as you probably know, they also reported 5%, 5.5% interest in Metalla and 8.5% interest in Gold Royalty. Um, what I would look on that. I mean, I'm not on the Tether board, and I don't have beer with the guy every week. So I'm giving my own speculation, not what he has told me. But I think the interest in gold royalties should be seen as something different from the gold stable coin. As you know, they are buying physical gold. They've been buying physical gold very, very heavily. And in fact, in the third quarter, this is astonishing for people who don't know, in the third quarter, Tether bought more gold bullion than any central bank out there, and by a wide margin. So if there'd have been a central bank, they would have been the number one buyer of gold last quarter.
Yeah, don't
Um,
tell the Bitcoin maxi people that because they're still repeating that Bitcoin is gold 2.0. But
yeah,
meanwhile, they're one of their top stable coins is accumulating lots of gold exposure.
yeah. Well, and clearly they've got a gold stable coin, as you know, but it's pretty small. I think the aim is to sort of get that bigger. But I think the plan with the gold royalties is something completely different, or is separate, I should say, not completely different, just separate. I mean, my speculation or assessment is that they want to consolidate the juniors and the mid, the juniors, the EMXs and ELEs and so on, elementals, until they're at a size where maybe they can merge with one of the intermediates like Triple Flag or a Cisco, and then I wouldn't be surprised. I wouldn't be surprised if they want to then take that private so that they just get the cash flow from the royalties directly, for royalty revenue, the royalty revenue directly, or failing that, start to pay out meaningful dividends. And by meaningful, I don't mean the 1% that most of them are paying out. But that's a ways in the future. For now, yeah, I think they're going to continue to try to consolidate the juniors. The problem is when everybody knows they're out there, they have to be sort of careful how they tread because they don't want everybody front running them. I don't mean front running in an illegal sense. I just mean
speculating which company, which royalty company the Tether will start to buy equity in next.
Exactly. And we did see a little bit of that earlier in the year, no question. I was surprised, I have to say, Jason, I was surprised that after they reported and made public that they had accumulated 5.5% in Metalla and 8.5% in gold royalty, I was sort of surprised that the stocks didn't move up meaningfully after that with individual investors, trying to get in ahead of a takeover. So I think Tether's obviously playing a little bit of a patient game here. And at some point, I don't know when it'll be, but at some point, I think we'll see another big run up in the stock price of one of those companies, followed by another announcement. But a lot depends, of course, on how willing the target is to play. I think gold royalty is probably more willing to play than Metalla. With a 5% interest, Tether doesn't really have much control over over Metalla. That doesn't get them a board seat. It doesn't get them to dictate what happens. They need to get meaningfully above that. They need to be at 20-25% before they can say, we want to put our people on the board. We want to, control this company.
Are the gold and silver miners that you cover, are they announcing substantial dividend increases lately?
Well, no, not really. We've seen dividend increases, no question. Pan American had a dividend increase that was meaningful. Royal Gold has made another dividend increase, but they're still the dividends are still pretty low. Let's just look at Royal Gold a second. I think this was their 37th or 38th consecutive dividend increase. And what is the dividend yield? The dividend yield is, less than 1%. So yeah, I always say to people, you don't buy a gold stock or a silver stock for the dividend.
Well, we've never had profit margins like this, so maybe things will change. There was a brief period of time, in the 1940s with dome mining and some of the others, right, when there was deflation and the gold price did well and the gold miners did well, where there was huge dividend increases, and also in the 70s. So there were small periods of time in past gold bull markets where the gold miners did have big dividend increases, but they were not consistent, right?
Sure. And of course, in the 70s, 60s and 70s, it was primarily the South Africans who were paying dividends, and the South Africans had a different business model back then and a different business model than other companies. As you know, you had the mining houses like Anglo and Gold Fields, who were the mining houses who would sponsor separate companies who would only own one mine. And so a lot of the cash flow, a lot of the revenue and cash flow from an individual mine didn't go back into the business. It was just distributed as dividends. That's a different business model today. But sure, if the price gets high enough and they don't see anything else to do with the cash, I think they're going to increase dividends. Most of the companies, when they're asked about capital allocation, they'll always say number one is increasing the business, growing the business. And that's both putting money back into your existing projects, and including brownfields and greenfields exploration. Number two would be M&A. And after that is paying down debt. And after that, I think most of the companies have a preference for dividends over buying back shares. I mean, the problem with dividends the problem with dividends in a highly cyclical business is you always want to make it very clear to people that the dividends are not necessarily
Sustainable.
sustainable. Because when a company pays a dividend and then cuts it, that frequently hurts more than they gain from putting a dividend in the first place.
Yeah, I
I mean,
agree.
some companies kind of like to have these formulae, like Barrick does, where they'll pay a base dividend. It's now been increased to 12.5 cents, but they'll pay a base dividend and then a bonus dividend based on a metric or whatever. So in the case of Barrick, it's how much free cash they have on their balance sheet. That's their metric. But different companies will use different metrics for those bonus dividends, and that perhaps makes a little bit more sense. But I don't think we're at the stage yet, honestly, Jason. I don't think we're at the stage yet where these companies don't actually have anything to do with their money. I think we've got cash flow. I think we've got M&A ahead of us for quite a while.
Yeah, I agree. I think companies are waiting for maybe a pullback before they pull the trigger on acquisition. Then we'll see press releases similar to what the Coeur d'Alene New Gold one, where there was a dip in some of the prices, in the metals price and the share prices. And then they come in and say, oh, we paid a premium. And it's like, yeah, after the share price fell, then you paid a premium to kind of a weighted average. So
Yeah, yeah. Well, yeah, I mean,
but with the dividend cut for our listeners out there, so like some of the other commodities industries, oil and natural gas, the base metal miners, when they cut the dividend, I mean, it could get brutal with the share price. Like some of the dividend cuts, I've seen the share price over like a 2 week span drop like 30 or 40% in the past for some of these mining companies for a base metal miner, oil and natural gas, if there is a dividend cut. So I'm sure the gold miners are looking at that, seeing that other commodities industries, if they do have to cut the dividend, it'll just be brutal with the share price drop.
yeah, yeah. But I mean, I think right now, I don't know any investors that are buying gold stocks for the dividends. So, so I think we're a ways away from that. But yeah, yeah.
Yeah, and share buybacks, I mean, after the stocks are already, some of them are at 50, most of them probably are close to 52-week highs, either at or near 52-week highs. Probably not the best to do share buybacks right now. I mean, normally I'm a big fan of share buybacks in bear markets. So if you have free cash flow and the market's not valuing your shares properly, doing a share buyback in a bear market there with your free cash flow, that's probably the time to do share buybacks rather than a
Well,
dividend.
yeah, of course, of course. But you've also got to do a share buyback when you have the cash. And a lot of them didn't have the cash, 3, 4 years ago. You've seen fewer share buybacks in the last quarter than you did in the first 2 quarters of the year. But they certainly haven't gone away by any means. But you're seeing fewer now, or less share buybacks.
Now the royalties, because we talked about this over the last couple of years, the with the Merlin discovery from AngloGold Ashanti in Nevada, with both of those royalties have been sold off from Origin. Origin sold their royalty or kept a part of it, and then what Altius Minerals sold the majority of their royalty off to Franco, and the other one was bought by Triple Flag for I think over $300 million. Have you seen any similar discoveries in size that have impressed you, similar to the AngloGold Ashanti discovery in Nevada lately?
No, no, I don't think so. I don't think so. I mean, you've obviously got some incredible royalties, like a Cisco's 5% on Malartic. Now, of course, the open pit mine is coming to an end, but they also have a tolling agreement on the Malartic mill. So, I mean, that's a phenomenal royalty, but that's not a new one. That's not a new discovery, of course.
Well, Lundin just spun off. Did you see Lundin? There's a separate Lundin royalty company. They just spun off at the massive discovery in what the Argentina Chile border.
Yeah, yep, I saw that. Yeah.
So I don't know what they plan on doing with that. If the Lundin family is going to grow, pay the extra funds to grow the company or not, or if that's just like a large dividend just to them. I'm not really sure what they plan on doing with that, but they did
No,
spin off.
I'm not sure yet because, as you know, some of these companies are spin-off royalties. It's like Great Bear was only ever going to be the Great Bear royalty, and other ones where they spin off, like Versamet, which was spun off from Pan American, B2, and Sandstorm, they try to, the aim is to build that into a genuine royalty company. So there's different motives with different companies spinning up their royalties. So yeah, it remains to be seen. I mean, I like the idea of spinning off your royalties to try and build a royalty company because it daylights value for the mining company. Typically, it helps them. Yeah, and that's been fairly successful. Remember with Versamet, before Versamet, you had Mavericks, and Mavericks was a similar thing where they got a bunch of royalties from Pan American and built it into a mining company.
And then sold it to Triple Flag bought Maverick. So
Yeah, yeah.
yeah, so the thing is, like, anytime some of these really good royalties, and Adrian highlighted them correctly, with the one from Origin and others, like anytime one of the, or Great Bear royalty a few years ago, anytime one of these really good tier one royalties on a large gold mine or a base metal mine comes online, I mean, the larger companies are all looking their chops. They're definitely targeting it now.
Oh, no question. Oh, no question. And of course, they're looking at it. They have the cash, and you know, not always, but there's always. It seems as though there's always one of the big companies that, for whatever reason, is willing to pay top dollar for a particular royalty because it fits their portfolio. It could be, I don't know, it could be, this is hypothetical now, it could be Royal Gold wanting to buy a North American royalty to offset the recent transactions they've done, in Africa and Turkey and so on. So there's always some company that's willing to pay a premium as to what the others are willing to pay. So these what I call good royalties and streams in good jurisdictions on good mines with good operators will always command a premium, always.
Are there any similar discoveries in Canada to what Artemis Gold found with Blackwater, or not really? Because I think I saw in the press release recently in the last 6 to 8 months that Barrick Gold and Newmont, they potentially found another large discovery not that far from the existing mine, the Cortez complex in Nevada. Do you think that that has a chance to be a massive discovery?
Well, are you talking about the 4 Mile discovery of Barrick?
Yeah.
Yeah, that's just Barrick. Newmont has the right, once the feasibility study is published, which will be 28, 29, Newmont has the right to pay Barrick to put that into the joint venture. But at the moment, it's just a Barrick mine. Oh, yeah, that is just a phenomenal discovery. I would think that is going to be comparable to Gold Strike. It's going to be, when it comes into production, it could well be the best mine in the Nevada Gold Mines joint venture. Yeah, I don't think it's
So
going to
you're
put a
saying
rock.
over, are you saying like over 10 million ounces of reserves, you think potentially, like district size?
Oh, yeah, definitely. Definitely. They don't have a reserve at the moment. They don't have a reserve at the moment. They're going to do, oh, sorry, Jason. I think it's in the middle of next year. They're going to do a reserve estimate. Don't quote me on that. Well, I've just said it, but
Well,
don't.
I mean, these things can be delayed, so we're not going to
Yeah,
hold you. We're not going to come on and say, "Gotcha." We're not going to hold you to that because these,
yeah.
unfortunately, in the mining industry, I mean, these things with the Nevada government, these things could be delayed 6 months.
Well, the other
Multiple.
thing that happens, of course, is if you're planning on doing amount of exploration and then you're going to cut it off for the resource study you're planning. But if that exploration is much more attractive, you're generating many more ounces than you thought you were going to, then the company itself sometimes wants to delay the resource estimate just to get more drilling included in the resource estimate. But so they don't have one at the moment, but I think it's going to be next year. They don't have any reserves at the moment, but based on everything that they're finding, that's going to be a phenomenal deposit.
Do you know Franco-Nevada Royal Gold already have royalties on that land package?
I think Royal, Royal, yes, Royal has a royalty on at least part of it. Franco and Wheaton do not, I'm 90% certain that the other two don't, but Royal Gold does have a royalty on at least part of that land package. And that's another thing that's, in my view, is simply not being reflected in Royal Gold's share price at the moment. I think if you ask most analysts, well, let's look at Royal Gold, tell me some of the parts. I don't think they mention the 4 Mile royalty, but that will be very attractive.
Well, Platte Reef is also about to cash flow phase one. I think the best asset they got in the Sandstorm portfolio is actually the Mar asset, because I know Franco Nevada tried to buy Mar separately at least a couple times from Sandstorm Gold, and Mara Glencore is probably going to start construction on that maybe first or second quarter next year. I think they're going to get the permits approved. That's like the undiscounted cash flows for that. That's a 30-year mine life on that base metal mine with a gold byproduct stream there at a very, very low cost. That was negotiated back in 2015 for that gold stream. So that's
Yeah,
a
yeah.
very low capped price.
No, no. I mean, there's some good assets that they acquired, but just weren't currently cash flowing.
Yep, and I think there will be potential good growth and re-rating opportunities there. In terms of Mexico, so I ask people always about Mexico because I think there's a lot of silver in Mexico still, especially with the silver price. Because everyone's like asking me, "Oh, where's the next silver mines going to come from?" I mean, there's a lot of potential for silver mines in Mexico. Are you okay with investing in Mexico right now? Or are you still worried about like the permitting process and getting an open pit mine approved?
No, it certainly seems to have improved recently. I think what is a concern to me, maybe as much as or even more than the permitting itself, would be the local the local
Security
attitude,
issues at the
the
mine?
local attitude towards mining. And so I think it's still very, very regional. If you look at Mexico, it's still very, very regional. Some of the areas way down in the south, which seem to have an anti-mining population, are less favorable. Obviously, Guerrero province or state, I should say, with the drug lords, that's less attractive than say Sonora. So I think it's very much a regional thing at the moment, but it does appear that the granting of permits, including potentially for open pit, is getting a lot easier. Now, let's not forget that most of the permits that have come out this year have been either for underground or they've been for open pit expansions, less so for new open pits, right? So, we're still not completely out of the woods yet, but it's certainly opened up a lot, certainly eased a lot.
And unfortunately, with the way things have been in Mexico, it seems like things every 6, 12, 18 months, like things can change drastically. So
Yeah.
the permitting process or like the government in an individual province, they want to renegotiate the royalty tax, especially with the gold and silver prices where we are. I think we're going to start to see, I think, unfortunately, a lot of the gold and silver newsletter writers predicted this would eventually start to happen, that the governments, either at the federal level or at the provincial level, now that we have much higher gold and silver prices, they're going to want to start to renegotiate what the royalty tax is that they're getting paid on the mine that's in their province.
Well, you're going to see that around the world. And we already are seeing it around the world, of course, Mali being just, the poster child, but we're seeing a lot of that already. And yeah, as the price of gold and silver move up, you're just going to see more of it, unfortunately.
So that'll potentially restrict what silver supply. Now, I think there's going to be plenty of gold supply, what in Nevada, Canada, Australia, but that could potentially restrict silver supply because the annual silver supply, Adrian, for the largest silver producing countries, whether that's Peru, Mexico, Chile, a lot of those countries, the annual silver supply has been in a downtrend, permanent downtrend now for the last 7 or 8 years, and for a bunch of different reasons. Low base metal prices, the country like Peru, what they've been fairly anti-mining, so they don't want to approve any new mines.
Yeah, yeah. I mean, and as you know, as your listeners know, we're getting less and less silver is coming from primary silver mines, and more of it is coming as byproduct. So something like 75% of silver production today is byproduct silver. And that's not all from gold mines. A lot of it is from tin mines, zinc mines, etc. So, yeah, silver's definitely, the supply demand for silver is definitely very favorable.
Well, also, despite the silver price going up, Adrian, I don't think we're going to see a huge supply response for silver now. Maybe like some of these smaller primary silver mines, they can make some expansions at the mine. But we're talking like some of the largest silver deposits, like a Carani in Peru, a La Navidad in Argentina. I don't think these things are going to come online anytime soon. It could be many, many years before even one of these mines comes online.
Well, yeah, and when Navidad comes on in Argentina or when Escobal comes on in Guatemala, that's not a price response, is it? That's other circumstances, other factors. The thing about silver is you just don't get there's not a very clear price response to silver, up and down, of course, up and down. And that's because number one, you don't have a lot of stockpiles. And so there are no large stockpiles that can come onto the market quickly in response to an increase in price. And that's different from gold. Now, I'm not saying my gold is for sale or your gold is for sale or the Central Bank of Kazakhstan's gold is for sale. But all of our physical gold, all of the gold has ever been mined, basically, other than stuff in my teeth, it is available for sale at some price. It still exists and it could be sold. And that's just not true for silver, of course. Silver is used and consumed and much more than gold. And you don't have a lot of stockpiles of silver. But the other factor that's equally important, if most of your silver is byproduct, and most of it is byproduct of base metal mines, then an increase or a decrease for that matter, but an increase in the price of silver does not lead the tin miner in Bolivia to open a new tin mine because 8% of the revenue comes from silver, right? And so you just don't get that price response. The same thing applies on the downside, of course, but if the price of silver declines, the tin miner in Bolivia doesn't cut back on his mining or close his tin mine because of a decline in the price of silver. So the response mechanism is not very strong.
Now there used to be an above ground stockpile of silver many, many decades ago. What FDR, he was overpaying for the silver price, but that stockpile that was billions of ounces of silver, a couple of billion ounces of silver. That silver's gone. It's been used
Yeah,
in
yeah.
micro amounts in tons of electronics and silver coating on smartphones and all this and enclosed silver fabric. That's a Lululemon and many of these other clothing companies are weaving silver thread into the fabric. So all that above ground stockpile, like you said, there was many, many decades ago. It's all gone.
Yeah, yeah. I think the only government or central bank that has silver right now is Saudi Arabia, of all places.
Well, you have the SLV, but that's not, a full audit. There's some silver in there. I don't know the exact amount. That's I think the largest above ground stockpile silver is in the SLV, however much is in there.
Right, right.
But I was speaking with a geologist, Adrian, and the geologist, I guess he goes a lot to Latin America, and he said by far, Bolivia, Peru, Mexico, Argentina, they have the most silver deposits, very large ones, good ones. But he was, cautiously optimistic. He doesn't think any of these things are going to get built for 7, 10 years, probably even longer than that.
Well, I think Escobal in Guatemala, I don't think we have to wait another 10 years for that one. I hope
Well,
not.
that was already built, right? Isn't that's a political
It's
issue?
already
There's
built, yeah, sorry, but it's shut, yeah, yeah.
Yeah, there's
No,
like
you're
there's
right, you're
protest.
right.
Isn't there environmental protesters? I think there's environmental.
No, it was less environmental than yeah, Tahoe, which used to own it, simply didn't have a social license. And so the local people took the government to court saying that the government had not done the consultations that they were required to take before the mine was approved. But it wasn't, it was less an environmental issue, as I understand it, than it was an issue of local people just not being listened to. And so Tahoe sold the mine. As you know, the mine was shut down. The Supreme Court of Guatemala ordered the mine shut until the government had gone through the mandated consultation process. So the local people do not actually have to approve it. It's not like British Columbia or Ontario, but the indigenous people don't have to approve it. The government just has to have gone through the consultation process. But of course, if you're going to do a consultation process and everybody's against it, that's a little bit difficult. But I think that'll come back eventually. But it's just slow going. And Pan American has said many times that they do not, they want to reopen the mine when the local people are in favor of the mine.
I mean, they need to renegotiate a deal here. That's billions of dollars of free cash flow at La Navidad in Argentina and Escobal. That those governments, jobs, reinvestment into the community, infrastructure, schools, electricity, clean water, all those things that could be reinvested with the free cash flow and the profits from those mines at these high silver prices. You look at a mine like La Navidad in Argentina with well over 300 million ounces of silver reserves that was supposed to produce over 20 million ounces of silver. If you ran the net present value of future discounted cash flows with that type of mine, it would be minting money. We were worth billions of dollars at today's silver prices.
Yeah, no, absolutely. Absolutely.
Yeah, it's just shocking that the governments won't approve these things and things are not moving along. It's just really sad at this point that they're not gonna try to get a deal done and move things along with the project.
Yeah. But I think partly, I mean, obviously what you just said is absolutely true, but partly Pan American is in no rush to move Navidad forward since they have the Guatemala one first coming on. So I think that the effort is in getting Escobal up. I
Okay.
wouldn't be surprised if once Escobal is up and running, then there's a bigger push to get Navidad going.
I mean, with Malay there, you'd think that he would get the mine fast tracked, but I heard that province in particular, they're not getting the permits approved, and Rick Roll has said there's other problems in that province.
Well,
That's
it is a provincial issue. Yeah, it's a provincial issue. But I don't think it's an issue that can't be solved. I mean, there's people who live in that area, other Argentines from Buenos Aires who have second homes there, and foreigners who have second homes there that don't want to mine. But I mean, the mine's on the other side of a mountain for most people. It's not like you're building a mine in the middle of a retirement community. So I think it will get done, but you need the local province, as you say. You need a local province to be on side, and they're not at the moment.
So, two more questions before I let you go, Adrian. Now that some of the share prices are doing well, where do you think there's actual still good value relative bargains, relative to current or future near-term cash flows, in the gold and silver space right now for investors?
Yeah, well, first of all, I'd say for people who are not invested or who are underinvested, I would invest across the space. And that includes the large cap royalty companies, the large cap miners. I mean, all selectively, of course. But I think where there's probably better values and more growth potential over the, let's say, 6-month, 18-month time horizon or 2-year time horizon would be in some of the the mid-tier and intermediate producers, but are growing rapidly. So companies like, whether it's Equinox that had a new mine come on that was troubled, but they're turning that around, and now, of course, they've got a second new mine, or whether it's Orla or Discovery that acquired a new mine from Barrick and/or Newmont. So those sort of companies that are that have more than one mine, but they have clear growth potential, and that applies to all three in different ways. I think that's where there's still a lot of potential for investors. And then just looking at some of the real juniors, whether they're junior royalty companies, junior exploration companies, there's a lot of good value there, and a lot of those companies are well cashed up because they've taken advantage of the higher prices to do financings. So I think there's some good opportunities there, definitely.
Are some of the smaller producers, have they been able to get all the funding they need to go and build a mine at these prices, or are they still struggling to get all the funding they need to say an expansion project for Artemis Gold with Blackwater, or a company, maybe they're building their first mine or it's their second mine, but they're building a much larger mine? Are there funding issues like there were in the past, or there's no more
Yeah,
funding
well, when
issues?
you say smaller, I guess we need to define it. When you said smaller, I was thinking of very small, and then you mentioned Artemis. I think the things in the category of Artemis, they're able to get their financing. I don't think that's a problem. The really small mines that are trying to produce, 50,000 or 80,000, maybe 50,000 a year at a single mine. I'm not looking to invest in those companies.
Okay, so the
Um,
market then probably is not wanting to finance those as much because they're thinking that those, as a worst case scenario, those would not be an acquisition target for a mid tier. Because the mid tier is what the mid tiers are looking at. If you're a mid tier gold miner, you don't want to buy a producing gold mine that's under what 100 or 200,000 ounces a year of
Sure.
production.
So they're not acquisition candidates. And the other thing, frankly, is that Rick Roll has said this: anything that can go wrong with a big mine can also go wrong with a small mine.
Yeah.
But you don't have the cushion.
Well, or the larger mining company to come in and buy things out if there is
Sure,
production problems. Yeah.
sure, sure.
Okay, well, as an investor in royalty and streaming companies for many, many years, I mean, like, I covered the mining companies, but with my personal portfolio, the majority of my money, physical metal or royalty and streaming companies for safety purposes, diversification, safety, free cash flow, because I know the mining companies are doing well, but there's always a risk, Adrian, you know this, you've been in the industry, that even if with the metals prices, the operations, they're building a mine, something goes wrong at the mine, and then all of a sudden the mining company has to do a financing, and then we're into share dilution, reverse stock split, or the management team is secretly negotiating a buyout to sell the mining company out.
Yeah, no, absolutely. And that's why we like royalties, isn't it?
Yep. I
Um,
mean, well, look in hindsight, you mentioned Royal Gold and Mount Milligan, right? That the share price got whacked, what, almost 50% drop, I think, for 6 to 8 months. That was a buying opportunity in hindsight, where when they restructured the Mount Milligan stream.
yeah, absolutely. And the same when Cobre Panama was closed. The key, of course, to a royalty company is if something goes wrong at the mine, maybe they lose revenue, but it doesn't put the company at risk,
Oh
right?
yeah. There
And
was
that's
no
the
chance. Yeah, I was seeing, like, just nasty comments about Franco Nevada, how people like, "Oh, Franco said it was bulletproof." The business was fine at
yeah,
$110 a share. Okay, they had a problem at one of their large assets. There was no other problems with any of their other assets. The underlying business was fine. There was a lot of upside there. The market had deeply discounted. I think we were saying that, like, the share price should have been a lot higher. It went down to 110. That was a bargain now in hindsight.
yeah, yeah, yeah.
Well, thank you so much for your time today. I saw in your newsletter you said that Royal Gold you think is probably one of the best buys of any of the royalty companies because what they have so much of their future growth already paid for in the next 5 to 7 years.
Well, I just think it was heavily discounted with the sandstorm. And notwithstanding the fact that they have more debt, they took on a lot of debt and they have more debt than the other large royalty companies. They'll be able to pay that off with the cash flow, and they have a lot of growth ahead of them. But I just don't think it's fully discounted in the market.
Well,
I
they
mean,
sold they sold the Versamet stake for 200 million, so a large chunk of that debt's already gone.
yeah.
And free cash flow will start paying that down fairly quickly, I think.
Oh, sure. They could. Other things being equal, they at these prices they could pay all their debt off by the end of next year. So that's pretty astonishing.
Well, that's a smart way to use debt, right? So you use debt to buy assets, and then you take the cash
Yep.
flow and you pay off the debt, and that's how you run a business over the long term. So in the short term, people
Yeah.
like the debt, the debt, the debt. It's a buying opportunity because they now diversified and they have a bunch of growth added to their pipeline.
Yeah. No, I agree.
So thank you so much for your time today. Next time we talk, maybe we're going to see gold at 4,500 or maybe on its way up to 5,000 and silver at over $60.
But um, I think that is a definite probability. We could even make it a certainty depending on when we next talk.
Well, I mean, Trump is about to. The rumors are he's about to replace the Fed chairman.
Yes.
And that Scott Bessent, the Treasury Secretary, for the job interviews for future Fed governors, he was asking about interest rate cuts and what the Fed governor's stance would be if they hired them on restarting quantitative easing. So,
Yeah. Yeah. No, the outlook is pretty bullish right now.
I'd say they probably want to devalue dollar. Now I see like on TV he says they want a strong dollar. Larry Kudlow, who's friends with Trump, talks about king dollar and strong dollar. I mean, what they're actually doing versus what they're saying are two entirely different things.
Right.
So please tell my listeners more about your newsletter and your asset management.
Well, thank you. Yeah, I mean, we have a newsletter that mainly focuses on specific recommendations. I mean, we do a little bit of macro, but it mainly focuses on specific recommendations. It's gold, silver, but also non-resource stocks as well. Money management, we manage money for clients. We're not one of these managers with, $1 million, $5 million minimums. We're pretty reasonable. If it makes sense for the client, we're happy to manage the money. And we're a lot more individualized than a lot of managers, meaning people that want tax losses or don't want tax losses, or people that want gold but only want juniors, or people that want gold but only want seniors. We will accommodate that. And the place to look for information will be our website, which is adrianday.com.